All right, so I've never done a show and tell before, but hey, there's a first time for everything, and gotta live up to the stock father name. So this YouTube video is about stocks and about a short squeeze that I think is developing for a number of stocks. I'm going to tell you first about one that is happening right now and just rocketing up, and it's for a stock that has the ticker symbol AGFY. So alphabet, giraffe, Frank, yellow. AGFY. It's a stock called AGFY, and it is in the business of vertical farming, but it's also a cannabis stock. And if you look at AGFY, this is what it has done. It has gone from 38 cents to about $2. And the short squeeze began starting about Tuesday and is unfolding right now. I mean, it is rocketing up. And because of the bear market, the crash, I think this situation, this could definitely play out some more for AGFY. Again, remember, no guarantees here. Anything that you're listening to, watching, reading, for anything that I put out is opinion, not advice. So no guarantees. Win, lose on you. Nonetheless, 38 cents to $2, like in the space of like 4 days, right? 4 days, like, yeah. So why did this AGFY situation unfold? Well, we got to take a step back, because it went from 36 bucks to 38 cents. Yeah, it sucks. I mean, hey, we were in this and it sucked being there. Still, you got to deal with the situation that's currently at hand, which is that right now, because of the bear market, because of the crash, and because it did this, it went from 38 to $36.38. Well, it takes a lot less money to control a stock at 38 cents than at $36. So whoever was buying all the way down, well, they are the strong hands, they are the diamond hands, and man, they are really putting it to the shorts. And there's definitely people that have shorted this. I'll tell you, in a second, how many people have shorted this. When I compare it to another stock that I think is setting up to do something similar. Yeah, and no games. I'm actually going to tell you the name of the stock and say that, hey, check out my Substack where we cover situations like this, and we'll have ongoing coverage of AGFY and this next stock, both in the Substack and then in our paid services at ATG Digital. Links are below if you want to follow up on that. So what's the stock that could do something similar to AGFY? SKLZ. So Sally, yeah, no word is coming to me for K. Larry, Zebra. SKLZ, it's a stock. The company name is Skills. And why is this the next potential AGFY? Well, because, yeah, whack, whack, did this, went from 46 to 83 cents, right? But remember, AGFY went from like 38 cents to $2 in 4 days, So what can SKLZ do? It's at 83 cents. Where could it go to? Well, let's go to some numbers. All right, got some notes here. I'll explain these to you. Well, number one, SKLZ, Skills, they got $470 million in cash. In other words, there is no possibility of them going bankrupt this week, next month, or anytime this year. They got $470 million in liquid cash. Yeah, they got debt, but that's got to be paid off years from now. So it doesn't matter. The cash is what matters. All right, $470 million. That's $1.12 of cash. And the stock price is 80 cents. So there's more cash than what the stock is trading for. I can tell you, folks, when you see that, you only see that near the end of bear markets, when really just this dumb, crazy, stupid prices, right? Where it makes no sense in any way. In other words, the stock market is saying that Skills is worth less than its cash balance, and it has an actual business, folks. they generated in the last 12 months, 377 million dollars in sales. All right, so they have an actual business that's there. Yeah, you can say, well, it's not growing, it's not this, it's not profitable, is this, whatever, fine. Still, it's an actual, real, actual business that does something real that, substantial. 377 million. We're not talking about like $500,000, $377 million. And if you compare the total stock market value, which is a multiplication of the stock price times the number of shares, well, Skills SKLZ is trading for like less than 1-time sales. I can tell you that that is abnormal. That should not be. 1-time sales, it's as if the company is bankrupt, not going to go bankrupt, is bankrupt. And that is obviously bogus because they have $470 million in cash. They have an actual business, 377 million, which they're actively pivoting to go and try and make it profitable. They've got enough cash to get there. So yeah, so, well, you might be like, well, Paul, there's a lot of stocks like this. Why? Why would somebody go and, maybe start to squeeze the shorts on SKLZ? Well, I got one more show and tell slide here, folks. So, number one, the short interest. Short interest, by the way, means that people who have bet on a stock going down. The game here, if you're doing that, is that you sell the stock at a high price and you try and buy it back at a cheaper price. Yep, the stock market allows you to do that, and you can do that in your brokerage account. Don't recommend it because you could get caught in one of these short squeezes if you don't know what you're doing. Nonetheless, getting back to the point, SKLZ has 46 million shares that have been sold short. In other words, people betting on the price going down. And those folks have obviously made good money, right? But for them to actually cash in on their bet, remember, they've got to go back and buy it back at the low price to actually cash in on their profits. And this is where our short squeeze unfolds. Because as they come in to buy here at the bottom, well, if there's nobody to sell it to them at 83 cents, well, guess what happens? Well, they're forced to keep paying up. 46 million is 10% of all the shares that are out there for SKLZ. And it's like an entire week's worth of what trades for SKLZ, which is a big number. It's a big number. Just take my word on that. It's a lot. I mean, a typical amount really would be might be a day or two. And if you compare it to AGFY, which is again a stock that's gone from 38 cents to $2 in about 4 trading days. Well, AGFY, before that rocket up from 38 cents to $2, well, they had a short interest that looked just the same as SKLZ. They had short interest of about 3.3 million shares. It's about 13% of the shares. And it was trading for where it had about 6+ days of trading volume, which is pre-squeeze. It was trading at 500,000 shares per day, which is about 6+ days of trading volume. So if you want to look at all these numbers, I'll just put it in there because I know some of you might want to take notes. But what's the bottom line here? Well, there's a few bottom lines. Number one, there's a short squeeze unfolding in AGFY, which is because of the fact that so many of these companies, these newer companies that came IPO in 2021, I mean, they've just been smashed, decimated, destroyed. And they are now heavily shorted, illiquid, and they've got a lot of people that have made money as a result of shorting them that have to come in and buy. And as that demand comes through, if there's no sellers at these low prices, and I can tell you folks, these are in some of our services, we ain't selling. We're not selling. We want these shorts to be squeezed. We want to get out at as high a price as we can, so we ain't selling. So, well, if we ain't selling, somebody else got to sell to them. But remember, if you had that size of decline, 36 to 38 cents or 83 to 83 cents, it means that the vast majority of people have sold. Anybody that still owns it, well, it's someone that was willing to put up with the pain, or else it's market makers and dealers, or people who understand that this short game is on and they can win, and they are going to try and squeeze the shorts for as high a price as possible. And that's what I believe is beginning to unfold with AGFY, could unfold with SKLZ. No guarantees, just something that I'm seeing, and that could actually happen with a number of stocks that are in similar situations as AGFY and SKLZ. If you're interested in those, please join my free Substack, subscribe to ATG Digital. If you enjoyed this video, you know what to do. Give us a thumbs up, subscribe.